everyone. We are from Group 4 that consists of me, Aura Jusiana, Ayu Safitri, and Arif Rahman Hakim. Now we are going to explain our material about tax assessment letter. First, I will explain to you the definition of STP. STP or tax assessment letter is a letter to collect taxes and administrative sanction in the form of interest and fine. Based on RE Law number 16 of 2000, it will be issued if first, the income tax has not been paid or is underpaid in the current year. Second, there is an underpayment of taxes due to waiting error or miscalculation. Third, subject to administrative sanction in form of fine and interest. 4. Entrepreneur who are taxed based on Value-Added Tax Law 190/84 and its amendment, but do not report their business activities to be confirmed as taxable entrepreneur. And then, entrepreneur who are not confirmed as taxable entrepreneur but make tax invoice. 6. Entrepreneur who have been confirmed as taxable entrepreneur do not make tax invoice or make tax invoice but are not on time or do not complete them completely. The additional information: if the taxpayer receives a bill for reason 1 and 2, the amount of underpayment of tax stated in letter is added interest 2% amount for maximum of 24 months. The time count from the time tax become due or part of tax year until the tax bill is issued. And if the recipient of tax bill is an entrepreneur, as mentioned in point 4, 5, and 6, a new VAT tax collection letter can be issued after tax administration research or based on a tax audit result. Payment must be made no later than 1 month from the issuance of tax collection letter. Now I will explain the definition of SKP. SKP is an assessment letter which includes assessment for underpayment of tax, an assessment letter for underpayment of additional tax, for taxation of zero, and assessment for overpayment of tax, as a written stipulation that give rise to right and obligation, contain the amount of tax payable in current year for taxpayer whose name and address are listed in the SKP. And then SKP is differentiated as follows. First, temporary tax assessment is an assessment of temporary taxable taxes that must be paid. Second, primitive tax assessment based on data provided by taxpayer without any correction or change from the tax authorities. Third, tax assessment letter is the opposite of the temporary tax assessment. Fourth, additional tax assessment, for example, tax withheld by the employer for the payment of wages, which is known as Income Tax Article 21. And the fifth, proposed billing provision, issued if later that there are new things that known or things that have not been revealed at the time of issuance of the complete assessment letter.
Assalamualaikum warahmatullahi wabarakatuh. My name is Rahman Hakim. I will continue our presentation. The next topic is about SKPKB. SKPKB or Surat Ketetapan Pajak Kurang Bayar is tax assessment that determine the amount of the tax base, the amount of tax credit, calculate the sanction and the amount of tax to be paid that is in the tax assessment. The amount of sanction for taxpayer who receive SKPKB. A. Additional penalty payment in the form of interest of 2% of the tax shortfall. This interest will be calculated many times every month with the imposition of sanction a maximum of 24 months from when the tax become due or the end of the tax period until the issuance of SKPKB. A fine of 2% per month is given to the taxpayer who are found to be owed tax, have not paid tax, or have not paid tax based on the result of the inspection by the Directorate General of Tax or other tax information, as well as for taxpayer who get a taxpayer in the identification number or NPWP as a taxpayer entrepreneur or PKP in an ex officio. B. Additional penalty payment in the form of an increase of 50% of the income tax that is not paid or underpaid in one tax year. C. Additional penalty payment in the form of an increase of 100% of the income tax that is not or is not deducted, collected, paid, and withheld or collected but not paid or underpaid. D. Fines of 50% and 100% as stated in points 2, 3, and 4 are imposed on the taxpayer who do not submit tax return according to the specific deadline. VAT and PPNBM that shall not be subject to 0% rates, and the taxpayer who do not do so. Bookkeeping or compliance has not been checked by the DGT. E. Additional penalty payment in the form of an increase of 100% of the value added tax on the goods and service, as well as sales tax on luxury good that is not paid or is underpaid. Next is SKPKBT. SKPKBT or Surat Keterangan Pajak Kurang Bayar Tambahan is a tax assessment letter that determines additional tax amount. The issuance of SKPKBT is based on the following. One is result of re-examination of a new data resulting in an increase in the amount of tax payable, including data has not been disclosed. The issuance of 5-year SKPKBT after the tax payable or the end of the tax period, part of the tax year, or the tax year as a consequence, the amount of tax not paid or underpaid in SKPKBT, plus administrative sanction in the form of an increase of 100% of the amount not paid or underpaid. 2. Result of research on the court decision that have obtained permanent legal force against taxpayer who have been convicted or committing criminal acts in the field of taxation or other crime that may cause state loss. The issuance of 5-year SKPKBT after the tax payable or the end of the tax period, part of the tax year, or tax year as a consequence, the amount of tax not paid or underpaid in SKPKBT, plus administrative sanction in the form of an increase of 100% of the amount not paid or underpaid. The result of investigation of the court decision are also published within 5 years, with the consequence the amount of tax not paid or underpaid in SKPKBT plus administrative sanction or interest 48% of the amount not paid or underpaid.
Hello guys, it's me Ayusa Fitri, and now I want to continue the presentation, the next topic about SKPN. SKPN or in Indonesia, Surat Ketetapan Pajak Nihil, is a tax assessment that determines the principal amount of tax is the same as the amount of credit. SKPN is issued based on the result of an examination of the notification letter. Okay, the last about SKPLB or in Indonesia Surat Ketetapan Pajak Lebih Bayar, an assessment letter for the overpayment of tax is a tax assessment that determines the amount of tax overpayment compared the tax that are owed or should not be payable. Director General of Tax can issue SKPLB based on the first, the result of research on the correctness of tax payment on taxpayer application. The second, the result of the examination of the notification letter indicate that the amount of tax credit or the amount of tax paid is greater than the amount of tax owed. Okay, the last, the result of examination of request for the tax overpayment return in which there is the tax credit amount or the amount of tax paid is greater than the amount of tax owed. Okay, next I want to show you how to calculate tax underpayment finance. For example, PT Murni's taxpayer had taxable income during the 2006 tax year of 100 million and submit their SPT on time. In April 2009, based on the result of the inspection by the Directorate General of Tax, the SKPKB was issued. The calculation of the interest penalty that must be paid by PT Murni is as follows. Okay, based on the case, we get taxable income 100 million, income tax payable 30 million, which is 30% of 100 million. Tax credit of PT Murni taxpayer is 10 million. So the underpaid tax of PT Murni's taxpayer is 20 million. As a result, 30 million minus 10 million. So now we will calculate the interest. The calculation is 24 times 2% times 20 million. So the result of the calculation is 9.600 million. So the total that PT Murni has to pay is 29.600 million. Although the SKPKB of PT Murni was issued more than 2 years after the end of the tax payable year, the amount of interest change for the shortfall is still multiplied by 24 months or 2 years because this calculation is the maximum sanction. Nah, if the SKPKB of PT Murni regarding its taxable income was issued in 2007, then calculation of the taxable fine is as follows. Underpaid tax is 20 million, and then the interest, we can get the calculation 12 times 2% times 20 million. So we get 4.800 million. So amount of tax accrued is 24.800 million. Okay, that's all for presentation. Thank you for watching this video.